There is a famous quote that goes like this: real estate cannot be lost or stolen, nor can it be carried away. Well, that is certainly true. Real estate is one of the safest investments in the world. There are different ways to invest in it though. The two most common ways are to directly purchase land or property, or indirectly participate in it by buying stocks of real estate companies. However, directly buying commercial properties often feature large ticket sizes, especially in metro cities. Even if you counter this by buying stocks of real estate companies, they are again prone to market risks. Welcome to Upsurge, and in this video, we will talk about the nitty-gritty of investing in real estate. Over the past couple of years, a new way to invest in commercial real estate has emerged in India, which was quite famous back in the US. It is called the Real Estate Investment Trust. It basically allows multiple investors to pool their investments, which are managed by a professional. Just like the underlying asset of mutual funds is usually equity, gold, debt, or a combination of these, the underlying asset in the case of REITs is primarily real estate holdings, or loans secured by real estate. And just like mutual funds have different types such as thematic funds, overnight funds, etc., there are different types of REITs too. Well, India currently has 3 REITs, and all of them are office REITs. Let me discuss them in more detail after we discuss some fundamental features of REITs. Number 1. The minimum ticket size to invest in REITs is about 10,000 to 15,000 rupees through initial public offerings and follow-on offers. The minimum lot size has been reduced from around 200 units to 1 unit for trading. Number 2. As an investor, you make money through dividends and interest from the REIT's rental income. This is generated by renting out and leasing real estate properties after deduction of some expenses related to the management and maintenance of the facilities. Currently, the SEBI mandate states that at least 90% of the net rental income received by the REIT needs to be passed on to the investors in the form of dividends and interest payments. Not just that, you also make money through capital appreciation of the REIT units, just like stocks and mutual funds. Number 3. As REITs are listed on the stock exchange, in case an investor sells it before 3 years, the gains will be considered as short-term and will be taxed at 15%. Long-term gains get taxed at a flat rate of 10% plus surcharge and cess, if applicable, over and above taking the necessary deductions. Now that you've got an idea about investment and returns of REITs, let's explore how you can go about investing in these funds. REITs are listed and traded on stock markets just like ETFs. As a result, purchasing units on the stock market is the best way to invest. So naturally, a demat account is mandatory for you to invest in REITs in India. Just like ETFs, the price of REITs units on stock markets changes depending on both the demand for units as well as the performance of the REIT. The limitation of these funds is that there is a lack of choice for investors. At present, we have only 3 options, which are Embassy Office Parks REITs, Mindspace Business Park REITs, and Brookfield India Real Estate Trust. Apart from the stock market purchases, you can also invest in REITs through mutual funds. However, at present, there is only one international mutual fund in India, which is Kotak International REIT Fund of Fund, which invests exclusively in international REITs. A few domestic mutual funds have also started investing in REITs in the past few years. However, the actual exposure of these schemes in the real estate investment is quite limited. Thus, the only way to gain some tangible exposure to real estate is currently through the purchase of REIT units on the stock market. Now, just like REITs, we also have infrastructure investment trusts that invest in income-generating assets. They invest in infrastructure projects such as roadways, transmissions, power plants, and other developing projects that start generating cash flow after a certain point in time. Furthermore, even InvITs aim to provide a steady stream of income through dividends as well as long-term capital appreciation. So REITs serve the purpose of investing in real estate and at the same time generating some regular cash flows from the investments. Hope you enjoyed this video and you will definitely like and share it so that the YouTube algorithm keeps on working in our favor. Thank you.